Welcome to Stream in Focus, with a focus in this instalment on a topical tax issue affecting the technology and media sector. I'm Vinesh Bharadwa, a tax partner in the technology and media team at BDO, and the issue I'm covering is the tax implications of displaced workers for businesses in the sector as a result of the COVID-19 pandemic and prolonged period of lockdown. At the start of the pandemic, most office-based employees were forced into remote working arrangements. Some employees became stranded in their host countries as border controls tightened, whilst others chose to spend the time during lockdown with family in a different country, where they found remote working easier. As a result, a significant number of employees are now performing work duties in a country different from their normal place of work. Initially, these arrangements were expected to be in place for a short period. However, it has now got to a point that employees will not be back to work in UK offices for some time. Many businesses have actually found success in remote working, meaning that the way in which organisations operate is beginning to change as a result of increased productivity and an increase in the positive well-being of staff. Employees have gone as far as seeking permission to work remotely from outside of the UK due to the improved lifestyle that this arrangement provides. Whilst businesses in the technology and media sector want to provide flexible working environments, the displacement of workers across the globe can inadvertently create tax compliance issues for businesses that they need to be aware of and manage. These tax compliance issues relate to payroll taxes, social security, corporate tax, and potentially even sales taxes arising in the host countries that employees are located. Where employees are based in another territory on a temporary basis for a period of less than 6 months, then there are likely to be fewer implications from a tax perspective arising. This is due to most countries having double tax treaties with the UK that help limit the scope of double taxation. However, in many instances, due to the prolonged period of global lockdown, members of staff may now have spent longer than 183 days in a particular non-UK territory, such that the exemption under tax treaties no longer applies, and potentially the residence of these staff members may have shifted for tax purposes. Individuals may therefore be subject to tax in the host territories where they are located, and as a result, this may trigger a requirement for employers to withhold payroll taxes in accordance with the rules of the host territory rather than in the UK. This requirement can also extend to social security contributions. Where a UK business has members of staff in this situation, it can also trigger corporate tax risks for the business, as the nature of an employee's activities could inadvertently create a taxable presence of the UK business known as a permanent establishment in the host country. The consequence of this would be a requirement to attribute an appropriate profit to the permanent establishment, resulting in the need to file appropriate tax returns and pay corporate taxes in the host territories. The criteria for creating a permanent establishment will differ for each territory, but it will typically include either having a fixed place of business in the host territory through which a business activity is carried on, and I would note here that this could include working from home depending on the circumstances, or the person undertaking the activities in the host territory has the authority to conclude contracts on the business's behalf and actually habitually does so. There is therefore a significant risk of creating a permanent establishment and attributing greater profits to a host territory where it is members of senior management or sales related teams that are working remotely in a non-UK territory. In addition to the corporate tax risk posed by such workers, there could also be a sales tax exposure in the host territory. Understanding and monitoring the activities being undertaken by remote workers in overseas territories is therefore essential in ensuring overseas liabilities to tax are not triggered and penalties for non-compliance, which can be quite severe, are avoided. BDO can assist in identifying the potential tax risks and help mitigate tax exposures, or assist with local tax filings and payment requirements globally. As a result of COVID-19, there is a potential long-term shift in attitudes of businesses, particularly in the technology and media sector, towards greater remote working due to the flexibility and opportunities that these working arrangements provide. And we can help formalise an international remote working policy that minimises the overall tax exposure.